Volatility predictions and key levels to watch as Bitcoin fights for a critical RS flip. That's a resistance and support flip for anybody who's not familiar with the term. Hey guys, it's Keith Allen. Welcome. It's the last week of the month, right? So we got a monthly close coming up. That is certainly something that we're going to talk about. We anticipate some volatility around that and some other things developing. So I'm going to point those things out to you, show you obviously all the things in the chart that I got my eyes on, because I think that, well, number one, Bitcoin's at a critical level. And while we've defended that level so far, pretty interesting after the weekly close last night. We did see a bit of a dip below that key level. So I'm going to in this analysis, in addition to showing you why I expect an increase in the near-term volatility, I'm going to show you the key levels that I'm watching. I'm going to show you how, what I see as some of the strengths and weaknesses in the chart. And we're going to look at order book and order flow data and FireCharts to give us, see if we can get some early insights of developing momentum shifts and help us pinpoint the range that Bitcoin might swing here in the coming days and weeks. So before we start, as per usual, if you're new to the stream, hey, welcome. Glad to have you with me. Do me a favor and do us both a favor, actually. Smash some buttons. Of course, the like and subscribe are some key ones. You want to hit that subscribe button so you don't miss any of the future streams. And live chat is open today, as per usual. So if you want to engage with me, I'd love having you. If you've got questions, I'll do my best to answer them. If you've got insights, I definitely want to hear them. Please share by all means. So, we're kind of navigating this together. So hopefully I can share some insights with you that will be helpful for you. And I always look forward to engaging with you guys. If you've got something for me, bring it. I want to start today on the candle chart because we did, of course, just have a weekly close and we have a monthly close coming up very, very soon. And we've been eyeing a very important level, what I think is the most important level on the chart at the moment. And that is where the 2025 open sits. And you can see that we have been up and down from this level here in the coming days. It was, let's see, when did we lose this first? We lost this back in February. So this was an indication things were breaking down. The Trump pump kind of, evaporated, or retraced, I should say. I have drawn on this chart so you can see the quarterly and the annual opens, et cetera. But I've also drawn a fib extension here from our all-time high around 109K to our swing low here around 74.5 here recently. And it kind of reveals an interesting level here. On the daily chart, actually on the weekly chart, you can see that we have a 21-week moving average, which is a pretty critical level. And we have the 0.5 fib. And of course, we have this 2025 open that we want to hang on to here as well. So if we do see a support test that takes us below this 2025 open, then I would look for, this range here, confluence between the 21-week moving average and the 0.5 fib, which is around just below 92K. Obviously, the trend line goes below that. We're at 89.5-ish. And, if things break down from there, then we've got some deeper issues we need to be watching, including, where price could go. And with that, I look to the, really to the next key moving averages. You see some confluence here between the 50-week moving average and what is the first week of the quarter open right here around, what was that? 78.4. So these are all things to watch potentially if things break down here. But for the moment, we're holding this level. We had a weekly close yesterday. I want to go to the trend precognition chart because I'm tracking a couple of things here. Somebody had asked me, if we had any new signals. Well, we don't have, we did not get a new signal on the weekly chart. Let's kind of, work our way out. No new signal on the weekly chart or on the daily chart. Right? So nothing new from either the A2 plus algo up top here or the A1 algo down here. You can see just some weak signals, not enough to throw an arrow here. You see the signal strength here on this graph here. But notice a couple of things happening here. We have recently had a golden cross between the 21-day and the 50-day moving average. But this needs to continue to pull the 100-day off of this trajectory with the 200. Otherwise, we could see a death cross there, right? So if this momentum continues, it will drag everything up and unwind these moving averages. Let's now look at it on the weekly chart. We have a weekly, I'll go ahead and not take that call in the middle of this stream. Not sure why that's happening. Hang on a second. So you can see, what was I talking about? Okay, the daily, right? So nothing on the daily. On the weekly, rather, no new signals here either. I'm watching here this A1 slope line, and the A1 slope line gives us a bit of a early indication, really, of what the momentum is doing in between signals. So some things that I like here. I told you I was going to talk about strengths and weaknesses in the chart. One of the strengths in the chart is that price has indeed bounced from this weekly RSI level. This, to me, is my line in the sand. At a macro level, historically, when Bitcoin is trading above this line here that I have marked at like 41.5 on the weekly RSI, when we're trading above that line, the uptrend is still intact. And when we fall below that line, we head to bear market territory. We had a near miss here at the end of March, but we're able to pull out of that and recover. So price still holding in what I think is a bull trend. And obviously on the daily, we're above this 21-day moving average. This is good. We're above our 2025 open, which is also good. Hang on a second, guys. I apologize for the interruptions. I have some, I need to maybe put my do not disturb on. And that will help for an hour. All right. Whoever's calling me, I'll call you back. Anyhow, so nothing new here, but a little bit of a weakness or lack of strength in the momentum here based on what trend precognition is saying on the weekly. Now, this could change. This is a real-time indicator, and it changes. It moves like the RSI does. So at the moment, this doesn't mean that price is necessarily going to dip down. It just means that some of that upward strength that we had is fading a little bit. But at the moment, price, like I said, is holding above. As we go out to the monthly, this is another one that I'm going to be watching very closely here. We have a monthly close coming in a few days. And I'm going to be looking, obviously, we're looking to see if new signals appear up here with the A2 plus algo. But I'm also watching down here because new signals on the A1 algo for trend precognition trigger when this yellow A1 slope line crosses the blue dashed center line. And so you could see we had one back in January, at the beginning of the year. But we could conceivably see a reversion with a move to the upside, or we could see it go to the downside, or it could stay flat. So this is what I'm watching here on the monthly. And as you can see, trying to it's slightly above flat here on the monthly. So we'll see what happens here. Now I want to take it out a step further and go to the 3-month version. 3-month version is not looking super strong right now. Obviously, we could bottom out here and see a reversion here, and that's what I will be watching for to see if this kicks up. This of course is at the end of the quarter, but if I expand back out to the full chart, you can see that we're actually the A2 plus algo is actually on a down signal from the beginning of the quarter. So April, right? From April 1st. So what this is indicating is that price doesn't necessarily mean that price is going to dump to Hades. But what this indicates is that price is not likely to clear this level. It's not, which was our all-time high at what, 109-ish, 109 and change. So not likely to make a new all-time high this quarter. And in terms of the strength of this signal, this is actually a pretty strong signal at this stage at about 57%. probability that this won't happen. Now, this could invalidate a pump up above this 109K level would invalidate the signal, but this is a reason that I don't expect a new all-time high. Well, I do expect a new all-time high before the end of the cycle. I don't necessarily expect it to happen before the end of this quarter. And maybe that lines up with what's happening in the this whole tariff war, right? We're in the middle of a 90-day negotiation period on tariffs. So that comes into play here. Oh man, bunch of comments here. Let me see if I can climb into what is happening. Oh boy, let's see. Not sharing anything, Keith. Oh, okay. I'm sorry about that, guys. Let's see. Let me take it back here. Wow. That's a bummer. Okay. Do over. Rewind. Let's see. Let's go back to this screen and try it like this. All right. Okay, guys. I apologize. And thanks to all who chimed in here. Let's see. Dude, we can't see. You're not sharing any charts. You can see it now, right? Okay. I see it's up there. So again, I apologize for that. So let me just rewind it back here for a second here. Okay. So we were talking about trend precognition signals on the daily and on the weekly. We were also talking about the whole open and the key level. So I'm going to back things up to where I started here and talk about this key level that we're watching here, right? The 2025 open, which is right around here at like 93.3-ish. And you can see that after last night's weekly close, we did wick down below that level. That is not a positive sign. It's positive that we came up and reclaimed it, but I don't like the weakness shown in that wick. And hey, maybe it was a manipulated move. I don't know. I don't have anything pointing to that at the moment, but it was certainly something that I was in tune to. So in terms of if things do break down from here, I had mentioned these key levels here. I also mentioned this fib retracement, which I have from our all-time high down to the swing low. And so if things do break down, I would be looking to see if things hold potentially around this 0.5 fib, which actually has confluence with the 21-week moving average. So this is a potential target for me. I think it's important that ultimately Bitcoin stays above this 2025 open, but we did have a bit of a breach of that last night, and that concerns me a little bit. It's one of the reasons that I think we could see more downside volatility. Not necessarily a bad thing, right? If we get a support test and that support test holds here, that would be very strong because that's easy to reclaim this 2025 open. If it breaks down, I'm still happy if we're above this trend line, but things obviously get more concerning as we go. Back to trend precognition, we were looking at this on the daily, weekly, monthly, and quarterly time frame. Okay, so I'm bringing it back here to the dailies. We got no new signals on the daily chart, as you can see, from either the A2 plus algo up here, that's the arrows, or the A1 algo down here, that's the dots. If we go to the weekly time frame, again, no new signals on the weekly. We do see momentum rolling down just a little bit here with the A1 slope line. That's what I was alluding to earlier. And so we get new signals from the A1 algo when this A1 slope line crosses below or above this blue dashed center line. So that's something we'll be watching for as well. On the monthly, we do have a monthly candle close coming up in a couple of days, right? So I think Wednesday. So this is something we'll be watching for to see if we get a new signal here. Again, that 21-week moving average, the 21-week moving average that I pointed to earlier is an area I'd love to see hold, but it's at a critical zone, and there are some reasons to expect volatility here that I'm going to share with you in a moment. But just to pay this thing off, as you can see, we don't have enough strength on a signal here yet, but if we look down to the A2 algo strength meter, there is just a little bit of strength shown here. This is like, let's see, about 16%, 17%. It's not very strong. We don't fire signals here until we get upwards of 25%. And your stronger ones are obviously up here above this 50% or 70%, 75% lines down here. So a little bit of strength, but fading strength, in my opinion, at the moment. The last thing I was telling you guys about is the quarterly. And the quarterly signal, obviously, we're pretty early in this signal. We've got 2 months and 3 days to go before this prints, and we get another candle. At the moment, this is showing a strong downtrend from the quarterly open on April 1st. Now, this does not indicate, as I was saying, that price is going to plummet through all these, through all of this and go to and dump to Hades. What it's indicating is price is not likely to reclaim the 109K level and go to new all-time high. So we got to maybe chop here for a little longer, maybe retest some support here a little longer. And I think this coincides somewhat with the 90-day negotiation phase of tariffs that we're in, right? So that should be somewhere around that time as well. That's going to be very interesting, right? If tariffs are lifted or greatly reduced from what we heard last month, then the market could react well to that. So what else do we have to watch out for? We're going to get into the order book and look at what's happening here shortly, and look at order book dynamics and order flow dynamics here in a little bit. But one thing I want to share with you guys is the reason I think we have a lot of volatility headed our way. And that is what's happening on the calendar. Okay. So obviously we have the monthly close coming in a few days, and that is a reason in itself for some volatility. But between now and then, and after that point, we have more potential catalysts for volatility. Now, some of these may be speed bumps, some of them may be more macro. All of them are going to create, I think, opportunities for some volatility if the order book, if we don't have guardrails that pin price in a range. So starting with tomorrow, we have some economic data coming in terms of red book year over year, which I think is an important one. Housing, housing is coming down a little bit here in the U.S., and housing is something that the Fed keeps an eye on in terms of what's happening with mortgage rates up, housing prices coming down, and sales lagging. Those are things that the Fed watches in terms of stimulating the economy with rate cuts, or potentially even QE at some point in time. And job quits to watch tomorrow. The retail inventory is going to be interesting to see if there's been some stockpiling because of tariffs, or if we're starting to see any trade deficits happen that from imports being paused because people don't want to pay the tariffs on them yet. Then on Wednesday, that's the last day of the month, we have mortgage rates. This is obviously something that the market is in tune to. We have GDP coming in, ADP, employment change, GDP, etc. Core PCE. Those are all big things that can be personal income. This is a huge day. Pending home sales, big PCE. These are all big metrics that the Fed is watching as they shape their policy, right? And then as we move into the first of the month, so this will be our monthly close. So you've got lots of reasons to fake us out, right? We could get some whipsaw action here through any of these metrics and in the monthly close. And then we move into May 1st. We have jobless claims, obviously a big one. Then on May 2nd, we have the unemployment rate. That's a huge one that the Fed is watching. And if you see a big spike in unemployment, those would be reasons that would maybe play to the imminent rate cut at some point in time sooner than later. Now, we know that the Fed is hanging on, waiting to see how tariffs shake out and how that shapes the economy, because there is no certainty with what's going to happen. And apparently the White House doesn't seem to understand that. But this is going to be a big event too. Then we head into the weekend where maybe we get some of that, those weekend whale games that tend to shake some people out for those who are playing in that. And then not too long from there, we have, what's this? On Wednesday, the 7th, we have our Fed interest rate decision meeting and the Fed press conference, which is always a market mover on any given day. So this will have some macro implications, in my opinion. I'm still not expecting a Fed rate cut at this point because of the uncertainty on tariffs. But maybe some of these other elements, like unemployment and housing, trigger the Fed to make a decision. We'll just have to see how that develops. But these, in my opinion, are all reasons to expect volatility. They're all potential. Every one of these data points is a potential catalyst. You put them all together, we've got lots of reasons, and they're coming in rapid succession, right? So these are all reasons to expect more volatility in the coming days and weeks. Now, what does the order book set up for? How much volatility is the order book going to tolerate? And well, if you're new to looking at order books, I could tell you this. I could tell you that liquidity dampens volatility. And so the brighter spots on the chart are where we have the most liquidity. The darker spots on the chart are where there's the least liquidity. And so if we zoom out a little bit, we can see maybe with a little bit more clarity of, big picture focus of where things are. And let me add some contrast here into the chart. You can see that we do obviously have the most liquidity overhead, holding price pinned in this range. But this is changing a little bit, right? This is eroded a little slightly from last week. We can also see that some of these blocks of ask liquidity have moved down a bit, and that is a technique that is used to push price down. It's not necessarily people chasing price. It is people pushing price down lower. Now, past, through the weekend, et cetera, price held up and absorbed remarkably well, in my opinion. But we do see, as you can see, some of this stepping down as we zoom into tighter time frames. You can see some of these blocks of ask liquidity stepping down. Meanwhile, we're also getting some bids to float up. So this is a dynamic we have to watch very, very closely. Now, at the moment, we do have some decent, not a ton, but some decent bid liquidity between 89 and 90. But that key level we're looking at is this 93.3 range, right? So we're very close to that critical level that we want to see held. If we zoom in to the daily, you can see this is the battleground right here. It was defended yesterday. That dip went down to about 93. And we popped back up, but these wicks, these breaches of this 2025 open, to me, are signs of weakness. So let's just take a look at this on a shorter time frame. Yesterday, weekly close happened, and then an hour later, price dumps below that support level and then recovered quickly. The recovery was good to see. The breakdown, not so good to see. And so there's potential for this to happen again, obviously, as we see price heading in that direction at the moment. We're only about $400 away from it. So that's something that I'm very much in tune to. Another thing that I'm very much in tune to is what's happening with order flow. And this is the bin CVD that's telling us that whales are still buying at this level. So yes, it's normal to see some profit taking when we get to these, when price peaks, and it is smart, in my opinion, to at least take some profits when you hit these key resistance levels, in case something happens, in case, well, let's be honest, let's call it what it is. In case this ridiculous, ever-changing economic policy and trade policy from a certain orange man has the potential to break the cycle, has the potential to kill it short. So we obviously have to be in tune to that. Not what I want to happen, not what at the moment I think is going to happen in the long run, but I think that we're going to have a bumpy ride between um, now and getting back to all-time highs. Uh, and in terms of what we're seeing right now, in terms of the range of volatility, I would say that this 90K level looks like, at least for the moment, there's enough liquidity here to hold us. Obviously, a rug pull can change that in an instant, but I don't expect um, I don't expect necessarily a breakdown unless we started seeing something, in terms of liquidity getting rugged or moved out of there. So that's in line with where the 200-day moving average is. So basically saying that I expect the 200 and the trend line to hold here at least in the near term, unless we see a change in liquidity, namely a rug pull down at this level that would make way for price to punch through. With uh, the amount of ETF flow that we've seen in the past week or so, including some nearly record days of inflows, I think there's appetite. I think there's still appetite in this market to buy Bitcoin at these levels. I think the market is concerned about what's going to happen to equities, specifically if tariffs do continue or tariffs stay in an elevated state. Bitcoin, of course, is, how should I say, protected from tariffs, right? There's nothing to charge a tariff on Bitcoin. So maybe that's a safe investment against a declining US dollar. Maybe that's a safe investment against what is happening in this economy. Or maybe it's a hedge against what's happening in this economy, I should say. So, for that, you go ahead and consult your favorite financial advisor for that. That's not what I do here. I'm just trying to show you what I'm watching in the charts and what I think you should be in tune to as we enter what I think are going to be days of volatility. Now, maybe around some of these key announcements, we get more bid liquidity coming into the range that tightens up the range and protects the downside. So we'll be watching for that. And really, I watch this every day. And that's the beauty of subscribing to these tools, is you can see it in real time, what's happening, and react. The alpha is only actionable for so long until things have played out. So that's what I'm watching here on this side. I apologize, guys, for the front side of this where we did not have graphics that have the charts shared for you. I think I covered most of what I wanted to talk about here today. Alt's a different story, and there are some alts that have been performing. In fact, you know what? I want to show you. I will show you something else in the MI dashboard. This is our price returns and drawdowns, and this is pretty much all USDT pairs on Binance right here. So we could expand this and see all the different pairs. I just, it's easy because so much of the market moves together. It's easy to see this when it's, in a consolidated form. And we can see that the vast majority of alts have been trading at a high level of profit over the past couple of weeks, 29%, 25%, one with 21%. Not all of them, but many of them, right? So from perp, 57. Wow. Let's see if we can find any other huge ones. You get the point here, right? Not all of them. And this is why I think it's important to surround yourself with quality. If you can define quality in altcoins, those are the ones that I would be gravitating to. I trade very few alts. I have a couple of them in my portfolio, and I think that they're strong ones. So that's why I hang on to those. Why did this one do 156%? Maybe you guys know. I'm not that familiar. Maybe it's maybe because of a relationship with Solana. If anybody wants to shed some light on that, go ahead. I just, I don't know what all of these alts are, because Quite frankly, I think a lot of them are most of them are shit coins, and I try not to shit coin. Um, but there are profits to be made there for those who are into that sort of thing. In terms of staying in tune to where this price action is going to go, I want to show you something else that I think is interesting, and that is the correlation between uh, um, beta between alts and Bitcoin. Need to refresh this. I've had it open for a long time. Let's see. So on this chart here, we can see that in periods of high beta, which is the blue line, high beta has us near local support, local bottoms, and periods of low beta have us at or near tops. We can see a bit of a change in the regime here right now as we are heading for this intersection, which is an indication that price is moving up incrementally. But I'll be watching this low beta to see if it gets up into these heights, which obviously marks local areas of local tops. Now, as you can see, after local top, we get a dump, we get a correction, and then price returns to that. I had one more chart I wanted to share with you guys, I think. Let's see. The correlation chart shows that we are in we had come through this blue level, this period of capitulation where alts really dumped, and now we're in a period of optimism. Optimism sometimes will lead to blow off tops, so we're going to watch and see how things develop here in the coming days and weeks as well. And with that, I'll leave you with a parting shot of the order book here as we see price getting challenged a little bit here, and as we near that key level of 93.3K ish, which is where the 2025 open was. I'm going to look and see right here on the daily, and here it is. We're approaching that, only a few $100 away. So going to be interesting to see if price can defend here. I told you I saw that momentum was starting to fade a little bit on the bullish side, and this candle is pretty indicative of that right here. But again, it's not how the candle starts, it's how it finishes. We got a lot of time left in this trading day. We've got a few days left in this trading month, and 2 months left in this trading quarter. So we'll see how things develop as we move forward. But just wanted you guys to be in tune to what I'm looking at and what I see developing in the charts at this point. Hope that helps you out and gives you some insight. If you enjoy the streams, by all means, smash some buttons, and we will do this again tomorrow. All right, guys, have a great day.